Hello everyone and welcome to the Market Share. I'm Erik Clapsaddle, Senior Fixed Income Portfolio Manager. And with me today is Paul Gifford, our Chief Investment Officer. For those of you who regularly tune into the video, you'll see the roles at this table have been reversed. Today we want to talk to you about what is one of the largest parts of the U.S. economy and certainly one of the largest investments or purchases that individuals will make, their house. And we want to expound on the housing and mortgage markets. For the past 2 years, we've seen rates rapidly rise, and that's on the back of 15 years of central banks around the world maintaining zero and negative interest rates. Paul, let's talk housing.
Okay.
I know I'm not supposed to say it, but it has felt a little bit different this time.
Yes, and we know that saying it's different this time is some of the most dangerous words we can say, so we're going to go with unique. And we are going through a unique period of time. As Erik said, we went through a period of time of very low interest rates. And so if you are a home buyer today, you're not only looking at higher housing prices, but you're also looking at a higher cost to expense that. And so when you look at our first graphic, this is actually the mortgage rates over the last 25 years. And you'll see that we hit very low rates for about 10 to 12 years. And in the middle, there's actually a black line, and it goes back to where the norms were for most of the 90s and early 2000s, somewhere between 6 and 7.5%. So today, being back at around 7% are actually normal, but not in the context of the last 3 or 4 years. I remember coming to First Source 24 years ago, and I was thrilled that the bank was going to finance me at 7% for 30 years, because that helped me afford my house. So yes, Erik, as a home buyer, things are unique.
Sure. And while rates have moved to more historical norms, the house seller is still experiencing something a little more unique. Can you explain on that a little bit?
Yes, for the first time, basically in the U.S. housing market, you're having a situation where a home seller is looking at buying another home, but at a significantly higher interest rate. And our next graphic shows that. The next graphic really shows the mortgage rates that existing homeowners have. And you'll notice that 87% of those with a mortgage today have a rate under 5%. And if you look over to the left side, you'll actually notice that a majority of have them at 3% or less. Unbelievably low interest rates. So if you are a homeowner today with a mortgage and you're looking to sell and go to another house, maybe for a new job or whatever, you not only have to worry about the price you're selling your house at, the one you're buying, which is likely more expensive, but you're also going to see a significant jump in interest rates. And so what that has created is a situation where home sellers have become very hesitant about wanting to move. And so that's an interesting dynamic that has kind of slowed home sales in the United States.
Sure. So now that we have a good understanding to what is happening in the housing and mortgage markets, what sellers are experiencing, can you elaborate a little bit more on the housing sales you just spoke to?
Oh, absolutely. Our next graphic actually shows the housing sales, once again, over the last 25 years. And what we saw in 2022 and early 2023 in particular was a plummet in the number of home sales. And that had to do with the shock of the higher interest rates that the market was experiencing as the Federal Reserve was fighting inflation. You can also see that recently we've started to see an uptick in home sales. And that's really driven by multiple things. One, we continue to have a good economy. There's been strong growth in the labor market. Wage growth has been very positive, and consumers continue to have strong balance sheets. If you have all those things in place, that will lead to a stronger housing market, and we're just at the early stages of that. And we believe that the housing market is very important to the average consumer. It makes up a large chunk of their net worth. So we actually do need the housing market to improve.
Mm-hmm. Thank you, Paul. Really appreciate your insight. Thank you for the opportunity to be the one finally asking the questions here. But for those of you who enjoyed the video, feel free to share it with your friends and family. If you aren't subscribed to the Market Share, please click the QR code at the end of the Market Share and you can subscribe. Most importantly, thank you for the opportunities to serve you and your family. Have a great day.